Unlocked, and we are here on April the 2nd, 2020 for a Forex market analysis and live trading breakdown for you. And real quick, we're going to have our disclaimer up here for you to remind you that this webinar is for illustrative and educational purposes only. Please do not try and copy any of the trades or anything like that. We're just giving you examples of how to manage trades. These have already been in place already, and this video is in lag, so you're always in the past, so please don't try and mimic them. If you want to follow them, subscribe to our signal service. Otherwise, just use this as examples on how to manage trades or not to, one of the way, depending on how they turn out. Anyhow, we have some high probable Japanese candlestick patterns that were triggered this week, buy and sell patterns. We'll see how they are shaping up. We have these trades on already. And if you want to learn how to manage these types of signals, you can read the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in Kindle and paperback version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, let's go to our live action website here. We have the Forex-Trading-Unlocked.com website already pulled up with the workstation page and a Euro US dollar chart pulled up. As you can see, the Euro US dollar is hanging on its lows, and I think one of the things that you can use as a gauge for where the euro is going to go in the short run is the US dollar Swiss. Now, we had a signal that was triggered in that market, and we will go into it in just a second to show you why. So right now we're showing dollar strength and euro weakness. So the question is dollar strength really prevalent, or is it something that is just going on in this market? Remember, the euro is the #1 weight in the dollar index. Right now, the dollar index is obviously gaining strength because of the fact that the euro is down like it is. So we are bearish this market. As far as if this is just a short-term correction, then we're probably going to find support somewhere between now and somewhere around 107.5. If this market continues to be a bear, well, this thing definitely is going to be looking for newer move lows, probably down to the 105 to the 104 area. So just to give you a little signal, no pun intended, which we have the US dollar Swiss, and we have a buy signal. We had a 3 inside up, high probable Japanese candlestick pattern that happened a couple sessions ago. As you can see yesterday, the market after the close had followed through with this buy signal, and it was already had a nice little lead on it. And then the market opened up for today, and it basically just kept on following through from yesterday to make higher move highs. This market, where is this going to go to? Well, now here's the key: is if this is just a corrective rally right now to the upside, we are already in the middle of our target zone. So we still have up to about 97, 90, just below 98 even. That would be probably where we're going to have a failure point. However, if the dollar is really going to be a bull right now, this could be a big indication, because the Swiss is a flight to quality currency. So if Europe, with what's going on in Europe with the coronavirus, just like the rest of the globe, as this hits and gets harsher and harsher, I mean, with what's going on with Italy and Spain right now, these numbers are absolutely horrible. The UK is now growing, and even in Switzerland, the numbers are not that good. So, and that's a very small country. So right now, I think you're going to see it's going to be harder to sell off the dollar than it is going to be to buy other currencies right now. So I think that's where you really have to lean on it right now. The trend overall, as you can see, isn't an uptrend. We had made a higher move high with a higher move low, and now we're coming off of that. So the question is, are we going to make a run for highs and go make a run above 99 cents and try and push parity? The dollar's had so much trouble up in that area. That's why I'm thinking this may just be a corrective move before we start to settle into a sideways trade. But if the dollar bulls are here, look out. We're going to be pushing parity probably in the next week or so, especially as the curve starts to continue to escalate globally and spread to other countries. And now it's starting to blow up in some of these other countries. So some things are under control, but we know that the curve still is not flattening yet, and we have at least a week or two, at least, before things are going to change. So we'll be monitoring this, and I think that right now, dollar bulls are getting a lift from that one fundamental. One thing that's getting me to the point where I think maybe we might settle into a sideways trade is that maybe we're setting the boundaries. If you look at the pound US dollar, look at how the volatility has just collapsed. It's just unreal how we've had this major range from $1.32 down to $1.14 back to $1.23, and now we've just been hovering in this little spot right here. So if the pound is giving any indication of what's going to happen with the currency markets, then maybe the currencies are finally, because this is one of the biggest components of the dollar index. So if it's stabilizing in the wake of its own problems with the coronavirus, then maybe the other European currencies will do the same. They're just fluctuating still and trying to set their range. Do I think that this is going to be the range for the pound for a while? Well, I can see that as it traded here through all these months, most days, that was the range. It was pretty tight, very odd for the pound to begin with, to be just going sideways and that kind of a thing. But if it's setting the tone, that maybe the environment, maybe the big shock of all this is over with the currencies, and now they're going to start to stabilize into more of a sideways swing trade, kind of a neutral trade before we have any real results to go off of. So we have to see how severe things go. We have weeks and even a couple months before we really can start to be like, oh boy, now we know this is bad. If things start to flatten out and if the virus starts to wane quickly over the next 2 months, things will probably stabilize relatively quickly. However, if we're still in the same position where we're at now, where, well, I don't, hopefully not escalating still in 2 months from now, well, then we know that this is going to have an impact that will reach into the fall for sure, severely, and definitely then we'll be heading into wintertime when things would probably be stabilizing. Not a good time to start stabilizing. So, but we'll see. Hopefully things get better. So now we have another market that's also showing dollar strength with another signal. So we saw the 3 inside up buy signal in the US dollar Swiss. Now we have the 3 inside down sell signal in the New Zealand dollar US dollar. And as you can see, yesterday the market was lower. Today, not so much, but we still have a nice little range. I mean, if this was just a corrective rally recently, this might be the lead on a big break that's going to target new lows all the way down here at 54 cents. Am I calling for this market to get down to 54 cents? Absolutely not. But obviously the overall trend is lower. We've been making lower move lows, lower move highs. We have just done this followed by a sell signal. So now this high here from a couple sessions ago, this becomes our risk level, and this also is our breakout level. All trading below this keeps the trend intact. So only if a violation here would have us more coming up towards where we have this. You could see that the trend is coming down this way. But I don't think that this market is set for sideways, but who knows? Maybe the pound, like I said, is setting the tone, and these markets are going to start to gyrate sideways. But then that would mean that if the sell signal is valid, as we come down into this area, then this probably would set the lower half of the range, and then this would be where we would look to see a sideways trade develop. Is that going to happen? Well, if we are coming into a flattening of the curves, then we would look for this markets aren't going to bottom that quickly, I don't think. I think they're going to probably digest for a while and bobble sideways before they seriously start to trend back. So the dollar strength right now is really good. In the short run, however, in the long run, the dollar being as strong as it is versus some currencies, this is not very good at all. Versus the euro and stuff like that, yeah, that's not a big deal. But as we get into some of these other currencies, it is becoming a very, very big deal, especially something like the New Zealand dollar, US dollar. But since we have this currency here in this trading zone, the Australian dollar, US dollar, we didn't get a sell signal, but as you can see, it is turning around as well. Now, this market has been kind of in tandem with the New Zealand dollar. So not that this is going to be a bear because of it, but I think that you have a good opportunity here, you know, especially with trading below the high from a couple sessions ago, that right now we're probably going to get back down towards this 58-cent level over the next few sessions. So we'll see. I mean, there's no sell signal in here, but if this market is in tandem, it has a little bit more volatility than the New Zealand dollar does, and it seems to, especially now when it goes to the downside, seems to sell off much quicker. So there might be a little more bang for your buck in this one, but there is no signal in this market. So we're bearish to New Zealand dollar, US dollar, just reminding you of the fact that they're right now trading pretty much in tandem. So US dollar JPY, here's an interesting one that has been all over the place, and like the pound, this one seems to be trying to stabilize in this area. Like, could you imagine if we start to have a sideways trade like this for months, which we could, and it develops right here, and that would mean that we're probably setting a range between 106 and 109, and we're just going to go just bobble along this little area for the next like 3-4 months. This could happen. You know, it may very well be that while the stock markets are winding all over the place, one of the first places you're going to find stability is going to be in the currency markets, because we already know that the interest rate markets, they can't cut rates very much anymore. All they can do is quantitative easing, which is basically just buying up and trying to support the market. So we already know where that variable is. That's not going to change, especially when it comes to the US dollar. So that component is now flat. So what variables do you look for? Well, now you look for, the ebbing and flowing of the currencies. So as these start to stabilize, then I think the other markets will finally stabilize also. So we have, just like there's an ebb and flow, you have your equity curve, you have your gold curve, you have your interest rate curve. Well, then there's also the currency curve, and especially right now, the currency curve is helping to, I think, give us the true gauge of what's going on. I mean, when you look at the volatility that we've had in some of these markets, it's just absolutely nuts. So we don't have anything to go on in the US dollar yen. So like this in the pound, we're looking for sideways. You got to wait for a signal, and there may not be one for a while. We may be just establishing a range, and then we'll have to figure out what to do with that. So just to give you a little bit more of an idea of whether we have dollar strength or dollar weakness, you can see that the US dollar today is under a little pressure against the Turkish lira, but look at how it's been pressing new highs like crazy over the past week. So this one has no, as far as the other currencies where they've been kind of sideways and chopping around, this one had no problem being a dollar bull week long. This could be most likely a profit-taking break. As you can see, this market, it's in a bull. I mean, it's just right now coming off its highs. So for it to correct back, do something like this, especially be a little bit volatile now, is very, 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 very normal for something like this to happen. And right now we're at 9:30, almost 9:30 in Chicago, Central Standard Time. 3 hours from now, this market could be making new highs. So we have no idea. I wouldn't say that this is a foreshadowing of is coming from one of our lesser currencies. I think this is profit taking because just look at the move it's had in the past since it bottomed here and made this new higher move low, which supports a higher move trend. Now the steepness of this trend is starting to get a little worrisome, but right now things are escalating in the Middle East, things are escalating in Turkey and in certain areas around the world. So we have to see how they manage. If they flatten out over the next week, then I think you might start to see a stability start to happen with this market, with this currency cross. But then even still, I think you're going to see the market buffer around these upper levels before it can even remotely retrace back to these, like, say, $6 or $6 Turkish lira. So anyhow, let's see what we get for 6 liras to the dollar, rather. Now let's go to the US dollar Mexican peso, another market that's been very volatile and extreme in its volatility over the past few sessions and weeks. As you can see, look at this one. This had a corrective move. It bounced nice. And now this might be another indication that we're going to start to see stability within the currency markets. Probably buffering resistance and heading in a little bit sideways here, but I would key off this low and this high for any breakouts, especially to the upside. But I think right now, like we said, we might be starting to see some stability coming into the currency markets. If that does happen, because now there's really nothing left for the debt markets to do, this will be the place to see things pretty much, like I said, start to range trade. And once that happens, maybe then we'll start to see some stability in the stock markets as well. If not, then we probably will see the dollar bull return and continue to blast new or move highs. But right now, I mean, especially now, this market could also be overdone. Look at how vertical this market's been since the middle of February. I mean, this was an incredible jump in volatility and let alone in appreciation of the dollar versus the peso. So, and now as we find out how the coronavirus starts to affect things in Mexico, as it starts to expand its curve, we have to see how that goes as well. So it wouldn't be crazy to see us still get another rally and hit the 26, 27, maybe even 28 pesos to the dollar before we start to stabilize. So right now we've made higher move highs, higher move lows, still indicative of a bull trend. So do not, please use caution trying to be a bear on this currency. Don't try and pick a top. US dollar Canada also. Higher move highs, higher move lows on the big scheme of things. It's getting kind of choppy. This is a rough trade here. This one just all week long. Anyone long or short has to have gotten chewed up. I know we had a couple trades that we came in this week long. We should have, even if we would have left it, we still got stopped out. It was just one of those things. Speaking of the trades, we've been talking about these. We are long the US dollar Swiss, which we've been long since the 31st. as well as we are short the euro US dollar since the 31st, and we also have since the 30th, we have a bunch of options positions on. We are long the US dollar Canada from the 96.25, greater than 96.25 strike price. Obviously, since the market's at 97.19, that one's a plus. The Canada, we have the $1.43, market's at $1.41.59. This one's a loser right now, and the same with the yen. We have two that are a little, well, they're not that far. We have a 108.75, so it's just a little bit more than a dollar below the market. So these right now are just a little bit lower on the week, and then we have these that are up on the week, so we're pretty neutral on the trades right now. So it's just, but we're not done yet. We still have a couple more days left. Well, today and tomorrow. So the US dollar Canada, we're still looking for a little bit of a rally. There's not much for that to go to. Hopefully the sideways range trade doesn't stay the way it is, because otherwise it will, well, then the options are going to be bad. So, but the cash market ones, positions right now, those are still following through. So let's go back to the US dollar CHF. Oops. US dollar CHF. So we have the options position, and we also have the cash position on in this. So we're following through, looking for this one to continue higher. We have already a protective stop in the euro, which is a plus. And now after today's trading, we will raise, since we've already hit our target zone, we will raise the stop level in the Swiss contract, so that will be a plus as well. And then after that, keep on raising them as they continue either with the trend or they fall back and then stop us out. As far as for the options, we have until tomorrow yet for expiration. The Swiss trade, that one is following through. There's not much left, but that will clean up. That one where we'll definitely take out one of the, actually two of the Japanese yen trades. So we just need a little rally in the Canada to go, and then we'll have a good week on that one too. So those trades are all doing all right, hanging in there, and now we have just nothing left to go on. So we have those two high probable Japanese candlestick patterns that were triggered in the US dollar Swiss and the New Zealand dollar US dollar. So we're going to see how those go. Now the Swiss, remember, has already hit our upside target zone. So now it's just a matter of us working the stop. So please don't try and chase these trades. Like it said, do not. You're always in the past. This trade has already hit its target. So there's no reason to try and be a bull just because you're like, oh, there was a buy signal there. This could be just a corrective rally before we start to head lower. You know, this could be, you know, the higher move. We made a lower move low with a higher move high. That is indicative of itself of a neutral trend. So from this high, we made this low. We don't know if this is a higher move low from this one for a bull rally, or if this is the first low before we make lower move lows, confirming a very aggressive bear trend. So we'll see how these things manifest. Once again, on Amazon.com, you can find high probable Japanese candlestick patterns in the Kindle and paperback version. And please subscribe to our YouTube channel so you know when we're coming out with these videos, and you can also catch up on them if you're not available when they are broadcasting and streaming live. And you can always find us at www.forex-trading-unlocked.com.